Alright everybody, good afternoon and welcome to tonight's video for simplerstocks.com. And I want to just kind of look at something here. I'm looking at the SPX and sort of getting a feel for the overall marketplace, and going to leave you with that so that you can kind of carry this over into your own trading, your own portfolio, etc., etc. So yesterday had what I'd consider a little tight range, very slight follow-through trade, which often results in a snapback against the grain kind of a trade. In other words, if this had happened up top, we'd be looking for a short. As it stands, obviously the trade was down, the trend was down, so that results in a snapback bid, which we had today. Not a big thing, not even up really 1%, up better than a half, but not even a full percent. So what does that mean? Well, tomorrow you need to be aware that the payroll, non-farm payroll report is actually moved up a day. It's going to be tomorrow at 7:30 in the morning, as compared to normally Friday, the first Friday of the month at 7:30 in the morning. By the way, that's Central Standard Time. And so let's go look and see what we are to kind of expect. With 1 day left in the SPX here, we've got just about 15 points in expected volatility. Does that mean, plus or minus? Yes, it does. It means either or, plus or minus. And realistically, we could easily extend this out another 50% or so, my opinion, that is, to 21, 23 some odd points. The reason being is because we've got a lot of news in the market right now that's that's subject to basically the shoe could drop at any minute, and that is, with regard to Greece or even Putin. Don't forget that. That's not done. That's not going anywhere. And, maybe subsided for a little bit, but it's certainly not gone anywhere. In addition to the fact that we've got a long weekend, that's another thing to kind of consider, and then the fact that we've come off a little bit, obviously. So just ask yourself, this thing is to break some 25 some odd maybe handles tomorrow. Where does that put us? Well, we could come back down here and test some of these lows. We could. Maybe it's bid back up. Don't know. You just don't know. I mean, because anymore, the question is what's good for the market? Is it good news or bad news? I mean, the payroll numbers tomorrow say they're good, and the market does not like that, responds not so favorably, because the fear is then the Fed ratchets up the the interest rate talk to a sooner date, an earlier date, in which case this market is subject to break a little bit. And at that point, of course, you'd want to be long the dollar. That'd be a good long. You'd want to be short the euro. That'd probably be a good short, and more than likely actually be short the market for at least a short period. So here we are, basically unchanged to start off the second half of the year. We're coming into this is the beginning of the second half, and we're basically unchanged. I mean, this is where we started the thing, and this is at January 1 of 15, and this is where we're going to start it out July 1 of 2015. So volatility is in the air. Volatility is the key right now. Know it, understand it, live by it. Ask yourself, can your portfolio handle the expected move and or volatility? And if the answer is no, then obviously you need to lighten up a little bit. So good luck out there in this report tomorrow. Have a happy, safe, fun holiday weekend this weekend, and we'll be with you again to kick off the week next week. Until then, take care.